Hey traders, in this video I want to expand upon trailing stop methodologies. So I've already done a video on how to trail your stop loss using the ATR. In today's video, I am going to show you how to trail your stop using percentage. So this is for crypto and stock traders primarily. Obviously for Forex traders, you know that most strategies use pip-based stop losses and ATR-based stop losses, dynamic average true range. But in stocks and crypto, it's probably more common to see percentage-based stop losses. So the script I've made here allows us to choose between an ATR trailing stop or a percentage-based trailing stop. And I'll show you how I wrote the code. I'll break down the source code in today's video. I'm going to keep this one pretty short since I've already covered trailing stops in more detail in other videos, which I'll link to below in the description here. So for today's video, I'm not going to write the code with you. I'm just going to open up the Pine editor and break down the sections of code that I've written. So first of all, I'm using a script that I wrote in a past lesson called displaying stops and targets. So for today's lesson, I've just copied out the source code from this section here and made some adjustments. And these are the adjustments. First of all, I've set use bar magnified to true. This is optional, but I like to do this now in my strategy scripts. The second thing I've done is I've updated my Zen library to version 5. With this particular script, that doesn't change anything, but since I've updated the library, I thought I should update the library reference for the script. We've got a bunch of user input here. The first one is our stop type. So it's just a little drop-down box here, and you can choose between ATR-based or percentage-based. And these are our options here, our list of options. Then we have a stop loss multiplier. So depending on which option you choose from here will dictate what this stop multi input does. So if you choose ATR price, it's an ATR multiplier. If you choose percentage, it's just a percentage. So 1 would be 1%. So right now it's on percentage. If I put 10 in here, the trailing stop will now be 10% above the highest candle for short trades over the past 10 bars in this case. This is our trailing stop look back. We have our risk reward multiplier. Now the risk reward multiplier is just to set the target for when we start trailing. So this script doesn't actually take profit. It just trails your stop loss until your stop loss gets triggered. So it's just a trend following kind of technique. The script itself is pretty simple. It's not very profitable. It has minimal filters. We're just looking for hammers and stars above or below this moving average. That's the only criteria. But today's lesson isn't about the strategy itself. It's about how you can implement trailing stop code into your scripts. So that's all of our inputs. The final one here, trail distance, is the same as stop multiplier. So this is your initial stop loss. So by default, with the default settings, it's set to percentage based, and you have a 1% stop loss from the recent swing high or low. However, once your target gets hit, so this is a good example, we go short up here. The green line is our target. It gets hit on this bar here. And then the script doesn't exit the trade, but it does trigger the trailing stop. So from now on, every bar that draws onto the chart, the script is calculating its distance from its high up 10%. And as soon as that distance becomes less than our initial stop loss, the trailing stop will begin to go lower and lower to lock in profit until a bar hits that stop loss, and then we get stopped out on that trade. So stop loss multiplier is your initial stop. So if I set that to 5, for example, now we will have an initial stop loss of 5% from the swing high. And then once this green line gets hit, we will have a 1% distance from the swing high over our look back period. So you can adjust your initial stop and your trailing stop here. But anyway, that's our user inputs. The next thing we do is get our patterns. In this particular example, it's not important what patterns you detect. You can detect any pattern you prefer. Basically, this is where you would put in your script logic, your conditions, market conditions, your candlestick patterns, whatever it is you like to trade. That goes in after the user inputs. Then we detect if we have a valid long or short trade by combining all of those conditions. And then we calculate our long stops and our short stops and targets. So to do that, I calculate two different stops. Our long stop price, which is based on the ATR, and our long stop percent, which is based on our percentage input. So the math for that is quite simple. We're just multiplying the candle's low by 1 minus our input divided by 100. So in this case, we've got 1 divided by 100. Let me just write this out. So let's say that our low price was 100. This formula here would multiply that price by 1 minus, and then open parentheses, our stop loss multiplier. So in this case, that's 1% divided by 100. Close off those parentheses. That gives us 0.01. And then if we finish the equation, we get 0.99. And if this number here was any higher, then we'd get a lower multiplier here. And then just simply multiplying the price by 0.99 will give us our 1% stop loss from the lows. And for highs, it's exactly the same, except that we add 1 onto our percentage. So this allows us to have our percentage as a whole number. Instead of typing 0.01 for 1%, we can just put 1. And this formula will calculate our percentage distance from the low or high. Once we have that information, we just check, is our stop type, this setting here, equal to ATR price? If so, then we want to use the long stop price value. Otherwise, we want to use the long stop percent value as our stop loss price. Then we calculate the distance from our setup entry to our stop loss. And then we use that distance to calculate our risk reward by multiplying the distance by our risk reward multiplier and adding that to our setup confirmation price. So the setup confirmation is going to be the candle close, and we'll have a 1-to-1 risk reward by default. But if you want to, you can obviously change that in the settings. And then the script won't start trailing your stop loss until much later. Then next up, we save our stops and targets using VAR variables. Now here I've initialized these as NA. In order to do this, you need to specify the data type of your variable. If I get rid of float here, the script won't compile because you can't assign NA. NA type cannot be assigned to a variable that was defined without a type. So I need to add float in front of these in order to get that to compile. And then we have a flag here, a Boolean true or false flag. And this flag will be true if price has hit our take profit and false otherwise. And if we get a valid long or a valid short trade and our strategy.position size is equal to 0, so we do not have any positions open, then our trailing stop flag gets reset to false. We save the current setup's stop loss price and target price. And then we use the strategy.entry function to enter our long or short trade. So if we have a valid long, we enter long. Otherwise, we must have a valid short because those are the only two conditions that can execute this if statement. And so if we don't have a valid long, then we must have a valid short. And so same here. If we have a valid long trade, we enter long. Otherwise, we enter short. And that's our entry code. The next thing we do is check if our long target is hit. So if we have a position size greater than 0 and we are not currently trailing our stop loss, and if the current bar's high is greater than or equal to our target price, if all of these conditions are met, then trail is set to true. So now later on in the script, we can start trailing our stop loss once these can be met. Same thing for short trades, but opposite direction. We need a negative position size. If you're short, then you're short X amount of contracts in the negative. If you're long, it'll be a positive number. So that's how we check if we're long or short. And yeah, once we have triggered our trailing stop, that's where this code here comes in to play. So first, same as when we enter our trade up here, we have our short stop price and short stop percentage, and then we check which type we want to use. We need to do the same thing for our trailing stop. So these two prices here do exactly the same thing as our entry, stop, and target. There is no target. Just our trailing stop. We calculate an ATR-based trailing stop. So we subtract the ATR multiplied by our trail distance input. We subtract that value from the lowest low over our look back period. So 10 bars by default. And then for stop percent, it's exactly the same, except instead of an ATR, we are calculating the percentage distance and multiplying the low by that percentage. So with the default settings, it would be 0.99. And so we would get the lowest low over our look back and then multiply that price by 0.99 to get a 1% trailing stop below the candle low. And it's exactly the same for shorts, except that we are adding our ATR multiplier for our ATR stop price, and we are adding 1 to our percentage calculation for our percentage stop price. And then finally, we have these two blocks of code here, which are identical, but just different directions. If we have a position size greater than 0, so we are in a long trade, and we are trailing, so our target has been hit and trail has been set to true. If those two conditions are met, we're in an open trade and we are trailing our stop loss. Now we check if our stop type, so this little drop down box, is set to ATR price and the current long trail stop price value is greater than our saved stop loss. I should probably find a long example. Here's one. So if our long trail stop price, so the low minus the ATR multiplied by our distance input, if that price is greater than our trailing stop, then we overwrite our stop loss with the new value to lock in more profit. Otherwise, if our stop type is not ATR price, then we check if it's percentage. So if it's set to percentage, then we do exactly the same thing. We override our stop loss with this value instead. Now, the reason why I have extracted these calculations from the if statement instead of just having this in here, for example, the reason I don't do this is because in PineScript, when you are calling functions, especially something that calculates the lowest low over an X look back period, this if statement will not be executed on every single bar on our chart. The if statement will only be executed when we're involved in a long trade, and so we might get funky results from trying to use a function inside an if statement that doesn't get executed on every single bar on our chart. Not all functions are affected by this, but technical analysis functions definitely are. So I've extracted those calculations from the if statement, and then I apply those values to our stop loss if our trailing stop conditions are met. Or in other words, our trailing stop needs to be higher than our previous stop. Otherwise, our stop loss will move down, and that's the opposite of a trailing stop. Anyway, we do the same thing for a short trade, just opposite direction. And that's it. That's one way of adding a percentage-based trailing stop to your scripts. The final thing I do here is handle our fixed stop loss. So when we first enter a trade, here's a good example. We enter short on this kind of shooting star candle that opens and closes in its lower third. That's how I class a shooting star. It doesn't have to be red, although with the shooting star function in my Zen library, you can specify that the color must match. But that's not relevant for today's lesson. What I want you to pay attention to is that when we first enter our trade, our stop loss is here, and it's this code here that handles our initial stop being hit and our trailing stop. So this T_stop is the red line. And if a trade plays out profitably, like this one here, T_stop keeps getting updated and overwritten. And eventually, on every single bar on our chart, this function here will check if we're involved in a long trade. It'll check our stop loss. Oh, I just had a sip of cold coffee. It's disgusting. I've been talking too long. Anyway, so this function gets executed on every single bar, and all it does is check if our stop loss has been hit. There's no take profit for this particular example because we're just focusing on the trailing stop. And then we draw all of our information here. We plot our indicators and setups. In this case, it's just an EMA and our valid long and valid short triangles, these guys here. And then we also check if our position size is not equal to 0, that means we have an open trade, or we just got a setup, so a valid long or a valid short setup. If either of those conditions are met, then we draw our stop loss onto the chart. So if we're in an open trade, or we just got a setup candle and we are going to enter short on the next bar or long, then we draw our stop loss and take profit over that bar. And every single bar that we are still in a trade, we keep drawing our stop loss. With the target, we only draw the target until it gets hit. So with this plot, we check, is our position size not equal to 0, or do we have a trading setup? And are we not trailing our stop loss? Because if we are trailing our stop loss, we've already hit our target. And if I don't have this code in here, then we will have a green line drawing like this across our chart, which just looks stupid. So that's why I've written the code the way I have there. Anyway, that will do it for this lesson. I hope you found it interesting. As always, the source code will be below if you want to pull this apart, play around with it, steal parts of it, adapt it, whatever. Now, the script is a little bit more complex than it needs to be, but that's just because I have two options here to choose between percentage or ATR. If you are a percentage-based trader, you probably don't even need the ATR code, and you could just get rid of all of these mentions of stop price and just stick with the percent version of our stop loss calculation code. Anyway, that was a lot of information to dump on you. I hope I didn't rush through that too much. Just go and play around with the source code. That's the quickest way to learn this sort of thing, by getting your hands dirty. And as always, if you have any questions, shoot them to support@theartoftrading.com and I'll get back to you as soon as I can. Take care and good luck with your trading.